Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Wednesday, the 6th of March. Starting off with the S&P, which has bounced really where it was supposed to bounce, around old February resistance, 50, 50, 50, 60. I think the low today, the low yesterday rather, around 50, 56, so right on the mark and above the floor of that rising trend channel. The red one there from back in October. We did gap down yesterday, so there's a slight warning of potential breakdown. Support either 50-50 or if you have to fill the gap down to 49.80, that is what we're looking at. On the upside, while we remain above that 50-50 zone, looking for 52.20 sometime later this month. Best case scenario at this stage by the end of next month up to 53.30, but obviously that looks like that's a long way away at the moment. Moving on to the Nasdaq and Nasdaq 100, that is. Here you can see that we also gapped down, but sort of landed in the recent support zone around 17,800. Above that and the floor of that rising trend channel from October still have the chance of heading up to 18,400 and that September resistance line projection. Best case scenario here is up to the top of that October channel, 19,100. But obviously at this stage we're still looking for 18,400 as the upside. If we do break down, we would fill the bottom, or could fill the bottom of that gap and head down towards the 50-day moving average area around 17,500. Moving along to the stocks, and here nice to see a few repeats, but Airship Holdings is Airship AI Holdings is a new one. Here we've got a potential broadening triangle there. Top of the triangle there as high as $13. But in the meantime, we're looking for support to come in at old neckline resistance around the $3 mark. Above $3, then maybe the next or initial target there is initial support, old resistance on the way down at 750 sometime later this month. Next up is another situation of interest in terms, well, especially the bulls. Here we've hit the top of that rising trend channel from last summer, around $64. Above $64, we're looking for a fresh leg to the upside, the upper parallel of that rising trend channel from back in July. That would take us up to as high as basically $90 by the end of next month, although obviously at this stage it's a long way away. Ideally, we stay above the top of the latest gap, $53 in the meantime. Another stock beginning with Aeroenvironment, and here another gap higher through resistance. So we gapped down and then gapped up there, so that's a very strong bit of price action there, charting action. $150 is was the low of the range yesterday, and above that we're looking for the top of the channel there, as high as $185 maybe during the course of March. If in terms of the stop loss, you split the difference between 150 and where we are now, so maybe just below 160 would be the stop loss for the longs at this stage. On to another winner. Recent winner is Beyondspring. Here we've hit the top of that rising trend channel there from back in March. That's around the $3.05 level. Above $3.05, we're looking for the upper parallel of that rising trend channel, as high as $5.30 by the end of next month. In the meantime, we'd like to stay above, or basically the $2 area, which was resistance on the way down. Cmax is next, or Caremax rather is next, and here you can see got a potential rising trend channel base. We've broken through the 50-day moving average after not being above it since back in October. Top of that rising trend channel from January, heading for $18, and we're looking for that while we remain above the 50-day line at $10, which is basically the middle of yesterday's trading range. Going on to Dave now, and here the shares gapping up higher and basically hitting the top of that rising trend channel, the initial target there around $36. Above $36, there could be a bit of a follow through there to that January resistance line projection at $42. Hoping for that to happen sometime during this month while we remain on the right side of $30, basically the lower end of yesterday's range. We covered the next stock here before, Datasea, and interesting that we've got this, or basically bear trap island reversal, so gapping down there in September and then gapping up now. Looks like the shares are making a good job of finding support basically at the bottom of that gap down that we had back in September, around $5.60, and the longer we stay above that, the greater the chance of a move back towards the top of the recent range at $17 plus. We've already got a W-shaped reversal there, and ideally stay above $8.25, which was the midpoint of that W. Moving along to Janone, and here you can see that beautiful breakout here with the handle breakout through $1.25. Current situation is that we're making rapid progress towards the top of that wide rising trend channel from April last year. That's around the $3.70 mark, and we're looking at that during the course of March, especially while we remain above the Monday resistance zone around $1.90. We've covered Minim plenty of times in the recent past, and so that's normally good news. Here we've got a rising trend channel, a bit scrappy in terms of the near-term action, but what's good here is that on the dips we have remained above the 50-day line at $3.56. The longer we stay above the 50-day line, the greater the chance of move to $12 as soon as the end of next month. And we've got the unfilled gap to the upside there at the beginning of last month, which is very helpful. On to another near-term winner, and a regular in fact, Ocean Biomedical. Here we've hit the top of that broadening triangle there around $6.90, and looking for this market to make another leg up to the upside as high as $13 by the end of next month. The key though in the near term is to remain above resistance on the way down around $4.50. Above $4.50 then we have the not only the prospect of a retest of the $8 area, but also up to as high as $13 by the end of April. We covered the next stock very recently as well, Phunware, and here we've gapped up higher. We've gapped higher above or through a 50-day moving average, rising 50-day line. It's also a bear trap island reversal, so gapping down and making a new low, and then gapping up again above the 50-day line, $11.50. We're looking for up to $23 by the end of next month, or even sooner than that. The next situation is Simple, another near-term favorite, and here we've broken this falling wedge around the $4.10 level. Above that, we're looking for as high as $7 by the end of next month. Obviously, the initial target there, the 50-day line, around $5.30. But the upside here and recovery here, valid while we remain above that old September support there, around $4.20. On to the last two, and again, more regulars coming up here. Solowin, really breaking through all the barriers. The initial target here was $7.40, and then we were hoping that we could get up to the bottom of that gap at $12.50. That's also been achieved. So all that's left now is to fill the gap up to $30, which hopefully we could do by the end of this month. Ideally, we stay on the right side of previous sessions resistance around $16.40. Finishing off with a new name, which is Sarcos, and here beautiful mid-move consolidation. It looks like one. We gapped up through the rising 50-day line a few days ago, and all we need now is an end-of-day close through $2.10 to give us a target as high as $3.15 at the top of that broadening triangle from back in the summer. Upside certainly valid while we remain above yesterday's support at the $1.50 level. That's it for me today. More updates tomorrow.